Hey everyone, welcome back to Upside Down Data. Today I want to talk about Bitcoin and some different scenarios and factors that I think we'll need to look very closely at in terms of whether or not Bitcoin will fall off a cliff from here or if it will be able to start recovering. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. But a lot of updates, better indicators, and more over there. So with Bitcoin, there's been a lot of pain in the market. We really got rejected hard off of this 25K level. And it's been almost, pretty much just down only ever since. And in fact, what some people were pointing out on Twitter and as a particularly bearish factor was that we actually had a lower daily close in this bear market over here on September 6th compared to the lowest daily close that we had back in June over here on the 18th. And so a lot of people, when this happened, said, all right, here we go, new lows incoming pronto. Now, over the last couple of days, we haven't seen that. In fact, we actually caught a bit of a bounce with Bitcoin. So what I want to talk about is, should we take that bounce seriously? Does that mean that new lows aren't going to come? Or is there another way of interpreting this? So I want to talk about some different factors. And so I want to start off by talking about the bullish scenario in the sense of what things would we need to see for me, for example, to flip my bias more in a bullish stance. Currently, I lean more bearish on Bitcoin. What would we need to see to maybe feel a little bit more bullish about Bitcoin? Well, one level that we can just look at, which is again one that people have talked about a lot with Bitcoin's history, is the 200-week moving average. And the reason why this level has been talked about so much with Bitcoin is just look at how it acts as this kind of support at extreme times in the market, extreme lows and bear markets. Back in 2015, kind of more or less finding support there twice in that bear market, finding a bottom again in December of 2018 there, sort of more or less finding support there in the COVID crash in March 2020. But now what you'll note when you look at what's going on right here is this is a very different looking interaction with a 200-week moving average than we've had before, right? Look at how much time we've been spending below the 200-week moving average over here and how deeply below it we are relative to these times in the past. With the March 2020 crash, we fell pretty far below it, but then, within a week or so, we were back above it and then off to the races we went. December of 2018, we only just barely spent time below it, if at all, more or less just kind of bouncing right off of it. And then back in 2015, this is the time we actually would have spent our longest time below the 200-week, only one close here and open above. Here's where we spent a little bit more time. But again, look at how much closer we stayed to the 200-week moving average throughout this whole time. We weren't clearing and spending all this time deep below it like we are right now. So that's one thing that I think is quite bearish potentially. We're not really treating the 200-week moving average with much respect right now with Bitcoin, especially with this breakdown below it, which has been pretty nasty. Now we're spending more time considerably below it. And so really to start getting more hopeful about Bitcoin, at least in the shorter term, we really need to reclaim the 200-week and start holding it as support. Because if we can't do that, then it looks like Bitcoin's actually starting to break from the past, that this level that used to act as so much support maybe isn't going to do that anymore. And so really for me to start feeling more confident with Bitcoin, anything that happens below here doesn't really matter too much. We need to get back above it and hold that as support. I talked about that back here where, the hope was that we'd be able to do it back here. We failed. We crashed below it pretty precipitously. This 10% handle to the downside closing below it. A pretty clear loss of that important level starting to move down. So that's the first thing I think on the checklist, or one of the things on the checklist, is to reclaim the 200-week moving average. But that's not the only thing, right? And in fact, there's actually another data point that I would look at that would actually come into play sooner than that, that would make me start feeling a little bit bullish. And that is the market direction classifier, the MDC. It's a model that we have here on the channel. It's a model that tries to quantify what is a critical level for an asset to hold or to be above to be bullish versus bearish. So the way this model works, I've zoomed in just the price action from 2020, but you can look at previous videos, we show the whole history. The model works quite well at identifying pretty early on the beginning of these big uptrends, as well as this weakness that can lead into pretty nasty downtrends. So what the model does is it evaluates the price action that a given asset is engaging in, and it creates a level at which it thinks that if the price is above that level, that's bullish, and if it falls below that level, that's bearish. And that can lead to pretty substantial moves to the downside, especially in bear markets like where we are right now. And so we talked about this at the time when we fell below the MDC critical level all the way back here. And what I said at the time, and which has come to pass, is be careful. When you lose the MDC critical level, especially in a bear market, that can mean some pretty pronounced downside can follow. Look at what happened here, look what happened here. Now, I'm not necessarily prognosticating or saying that this same thing is going to happen again, but it can mean that significant downside can happen. So for me to start feeling bullish on Bitcoin again, I'd really like to see us reclaim the critical level of the MDC, which currently sits at about 21.5K. So we really need to get back there. If we don't, then my outlook is going to remain bearish, and especially the fact that we're below the 200-week and we're below the MDC critical level. That's why I'm currently leaning bearish. But again, if we can reclaim those, that would be where feeling more bullish might become more plausible, might be more realistic, and hope of a recovery might come in. So then again, if we're just evaluating this bounce here, the way I'm looking at this is just kind of more or less potentially just noise. That I'm not believing this yet just because we bounced and we've gotten a little bit above this kind of lowest close that we've gotten so far. Because this could just be a short-term thing that leads to more downside. So I'm not really believing this bounce too much personally. Now again, this could be a recovery, right? And there's nothing to say we have to keep going down. But personally, when I just look across those data, I think that this is more of a bearish. I still lean more bearish than I do bullish. So if that's the case, so if further lows are possible, let's just think about some other factors that might tell us where we should be looking to find possible support. So I've talked about this before, I'll just mention it again. So I think it's just useful to bring up, and there's some other data that coincides with this idea. So one level, just from a purely technical perspective, that a lot of people have called out as being a level where we might look to find support is around the 13 to kind of 12K range. I'll just set up another one down here. Let's say just kind of 11 to 13K more or less. So roughly here to roughly here. Somewhere in this zone is what a lot of people have talked about. And the reason is that this is a level that's acted as resistance in the past. So, after the high in the bull run in 2017, this relief rally topped out at around that level before coming back down. Then we found our top in 2019 up around that level. We got rejected off of that level more or less once here before clearing up above it. So some people have been looking at this as being the next level we might expect to find some possible support. And the other thing that we can look at to kind of get to that idea is just looking at the cost basis of coins in the Bitcoin network. So I'm currently showing you here the realized price as a function of age. So the different colors here are how old the coins are, but then just where cost bases sit across price level. And so again, realized price is when people spend a coin. So the idea is when one person spends, then another person buys. So the realized price of the person who spends becomes the cost basis of the person who bought. And so that's just basically the cost basis then of all those people who have bought is what's being shown here. And so what we talked about before is that, when we lost that 30K level, there was a lot of nothingness until we got back down closer to this 20K level. And now we've been kind of finding some support down here, which in some ways was kind of expected. But now what we're going to look for is that if we start losing support here, there's, some more cost basis that sits, in between where we are right now and further down. But really that next big wall, the next big surge in cost basis starts at around 12K. And so that would be, again, coinciding with that kind of 11 to 13 range, might be the next downside target. I've talked about that before. And the other thing that we can look at, just that gives some other confluence with that idea, is looking at how prices interacted with the long-term holder cost basis, so in an aggregate. And again, long-term holders are usually defined as people who have been holding Bitcoin for more than 140, 155 days. People use different definitions, but somewhere in that ballpark for what constitutes a long-term holder. And this is just their cost basis as an overall group. We've talked about this extensively before on the channel, that you tend to find your bottoms in bear markets below the long-term holder realized price. Even back here, we did dip down slightly below, and actually to a further degree than we've dipped down already, and to a greater degree in some of these bear markets. And in fact, if you just kind of look at the percent drawdown that we've seen from the long-term holder realized price in these previous ones to where we are right now, it actually comes out that finding a bottom at around 12K would be about in line with what we've seen in the past in these drawdowns. So if we look at it right now, we've spent a little bit of time below the long-term holder realized price, but not too much time. And the reason that why we care about this, why we care about cost basis, is that they tend to be psychologically important. I talked about this before on the channel. There's a psychological theory called prospect theory. This idea that you tend to feel losses and gains most acutely when you're near your cost basis or your break-even point, that 0 point. So basically, you know, if you're well in profit or well in loss, you know, a fluctuation of 10% probably won't really feel all that different from where you were before. But if you're right around your cost basis, you know, moving from above it to below it is quite psychologically impactful. And so that could lead to potentially some long-term holders getting antsy around these levels and deciding to sell out because they're getting fearful. They don't want to lose too much. They want to recoup that initial investment. And so if that happens, that could lead to one of these kind of final leg downs like we saw back here in 2015. You know, we dipped below and then there was this kind of ultimate capitulation, which finally ended up being the bottom. Same thing more or less happened in 2018. We kind of bounced off of it, then had our final push downwards. We haven't seen anything like that yet. Now again, you don't have to see it, but it is a dynamic that's played out before. And psychologically, it kind of makes sense why that could happen, right? Because you might have a lot of long-term holders starting to get really concerned here, starting to kind of get antsy. And then if you have enough of them suddenly breaking from the pack and deciding, all right, I'm getting out, dumping a lot of those coins that have been sitting idle for a long time back onto the market, all that fresh supply, that can lead to that final move down, where then you might get finally kind of the more convicted people to set the floor, to step in at whatever price they see as enough of a discount, which could then set the bottom, where everyone who is going to sell has sold, even though the long-term holders who might be convinced to sell have sold because they wanted to protect their cost basis and not lose more money. And then you end up setting in that ultimate bottom. So again, it doesn't have to happen, but if it does happen, it would not shock me. And again, it would be kind of this 11 to 13K range would be the first place I might look for support, because that would be, again, consistent with what we've seen in the past from those long-term holders. Now, the other thing that's, of course, important to talk about here, though, is that this is kind of all things internal to Bitcoin and what we might expect from past behavior. But again, past behavior is only going to be predictive of the future, assuming that there isn't a broader breakdown in environment that makes those past patterns no longer predictive. Because, you know, Bitcoin hasn't seen a full-on, you know, massive market downturn or recession in the past. And of course, one of the things that's been going on, as everyone I'm sure is well aware, is the really bearish outlook in the macro environment. And I actually think, personally, the thing that saved Bitcoin so far from new lows has been this relative strength in the stock market in the last couple of days, right? If we just look, you know, Bitcoin's been moving up the last couple of days. You know, it's, in my opinion, been kind of bailed out by the stock market having this decent move back up. But again, if we start seeing the stock market put in new lows, I personally would be very skeptical of the possibility of Bitcoin not putting in new lows while the stock market puts in new lows. So if we see kind of this action in the stock market resume here in the coming days and weeks, I think it's very reasonable to expect Bitcoin to start doing the same. And then maybe that could trigger that final meltdown, you know, that final capitulation in something like the long-term holder behavior that could be a signal of a bottom, again, assuming there's not a broader breakdown in the macro environment. Because again, if the stock market starts just falling off a cliff, you know, and just going way down, have a 2008 style crash or something like that, then I think, you know, all that prior action behavior in Bitcoin starts to look a little bit less useful because we don't have any idea of how Bitcoin would act in that environment. But it's certainly something to keep an eye on. And again, should we start seeing that, that would be a level that would be interesting, something to watch closely. And then coming out of that, how price reacts after that would be very useful to watch. Because again, the MDC, for example, is a dynamic level. It will react to what Bitcoin's doing. It would not surprise me to see something like this take place, have the MDC level come down and meet Bitcoin, and then have it go off to the races in that type of environment. Again, if we don't get a broader breakdown in the stock market, that kind of eventuality could certainly happen. But really, for me, until I see some more bullish signs, so either us reclaiming the MDC critical level, or an even more bullish outlook, if we were able to reclaim the 200-week moving average and hold it as support, until we see that, I lean bearish. And I think probably the more likely scenario here is to kind of sweep the lows at the very least, if not put in new lows. And really, I think for Bitcoin to not put in new lows, a lot of things need to go its way. I think the stock market needs to continue to show strength, and then I think Bitcoin might kind of get bailed out if that happens. Or if there's just some other bullish catalyst that comes in and we don't really see a lot more bearish sentiment entering broader markets. But again, I still think that the base case is new lows. But again, I'm not closed off to the idea of us being able to find a local bottom here. But I'm not going to really hang my hat on that too much until we start seeing some of those bullish signs that I mentioned before. Of course, none of this is financial advice. Make of these data as you will, but that's just what I'm seeing in the market as I look at this. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates that are indicators and more over there.